Okay, so we're gonna end off this chapter by doing PQ1-7, which is going to help us connect the qualitative characteristics discussed and assumptions discussed together. So PQ1-7 is name all the qualitative characteristics and name the assumptions. Do not look at the chapter, do it from memory because the midterm and exams you have to be able to name and define every single one of them. That goes without saying. When you have named them, indicate using connecting lines which assumptions was developed in response to which qualitative characteristics. Note that some characteristics may connect to more than one assumption. So I'm going to do this a little bit differently. I'm going to list out the qualitative characteristics. Then I'm going to write which ones they relate to in terms of assumptions and why. The first qualitative characteristic I'm going to talk about is faithful. And this relates to the separate entity assumption simply because the separate entity assumption, remember, that tells us that we're going to keep our personal life different from our business, or if we have two different businesses, we're going to keep those two financial transactions and statements separate. That obviously requires faithfulness, right? And the second one is full disclosure. So full disclosure is if something will affect the decisions of the external stakeholders, it must be reported. So obviously that relates closely to faithfulness, right? The next one is relevant. This relates directly to three different ones. Once again, separate entity. Relevant means that it impacts a future decision, right? So separate entity is very important because if we start recording our personal expenses in our business, then it's not relevant, right? The next one is going concern. Going concern is the business is going to operate in the foreseeable future. That's obviously relevant, right? That's relevant to make decisions, right? Because if you know the business is going to shut down very soon, then the management might be making unreasonable decisions, right? And the last one is time period. This is once again very important because the time period is relevant in our decision, right? Simple as that. The next qualitative characteristic is going to be comparable. And this one impacts unit of measure. We want to record everything in currency and in the same currency as a home country of where the business is operating. Once again, I got businesses in the United States. I'm going to convert that all to Canadian, right? The next one is verifiable. The verifiable. Verifiable is related to historical costs. Simply put, we record all transaction at the cost that we paid for it, no matter what the market value is or what the negotiations were or what the original price was. If we pay $11,000 for a car, even though this at $13,000, we're going to record $11,000. Simple as that. And we have source documents to back that up, which is the bill of sale, right? The next one is timely. This is obviously related to the time period. This goes without saying, right? Information is reported timely in artificial time periods, usually of 1 year, monthly, or quarterly. And then we have understandability. So understandability or understandable ties to all of the assumptions, right? Separate entity, units of measure, going concern, time period, historical cost, and full disclosure. And remember, understandability simply means group and present information so it is clear and condensed, right? So let's dumb it down as much as possible.